What's the best value stock you can buy right now with huge growth potential that is unique, proprietary, does something in the AI space that nobody can do, has huge potential, it's a mega cap, it's been sold off due to rotation and moving to small caps. What's the best? Is it Nvidia? Well, Nvidia is a great stock and we're going to get a great next earnings. However, no, it's not. It's Google. And let me share with you why. If we look at Google right now, because of the recent rotation and moving to small caps temporarily, what you've now got is you've got a price to earnings ratio of 25. Very, very good. One of the best price to earnings ratio we've seen for a very long time. Very, very nice indeed. We like that. We like that. Okay. Now then, let me show you something. And I've been saying this now for 3 years. Every time I analyze a stock, let me show you. Look at this. If you do the intrinsic value, which is reliable and accurate on Google, base case scenario, 19% overvalue. I've always said you can pay 20% minimum, at least 20% overvaluation. I'm happy for a high growth stock like Google. Anything like Google or Microsoft, or well, not so much Microsoft, that's much more expensive, but Google, Amazon, anything like that, anything that has high potential, I'm prepared to spend 20% overvalue and regard that as still undervalued, if that makes sense. 19%, we're just in that range. Best case scenario, 21% undervalue. Worst case scenario, 45%, but that we're not in a worst case scenario situation. Base case, we are undervalued where I would buy it. Look at the potential growth. We got huge potential uplift here, 328 billion and expecting a nice rise. We got rise on every single metric other than operating cash flow. It's pretty flat at the moment, right? Now, if we go here, look at the balance sheet, 414 billion. Would you rather own a mega cap with a balance sheet like that, or would you rather own a rubbish company? I know what I would rather buy when it's rotating. 414 billion in assets, 114 billion in liabilities, 100 billion is in cash. What about debt, long-term debt? 13 billion out of 114. So when interest rates come down, we often talk about mega caps don't benefit that much. They'll benefit a bit because 13 billion in debt. But bearing in mind, they've got 100 billion in cash. They could pay their debts off tomorrow if they wanted to. They'd rather earn the high profits on the cash. Anyway, so very, very good balance sheet. Look at this, solid numbers and going to get bigger with AI when AI starts to pay off. It hasn't done that yet. Look at the profitability score, 73%, 82. Look at the upside. Look at the potential. Look at all the potential. Inside selling is getting smaller and smaller and smaller. We always see inside selling from Google. It's just tax positions. It's getting smaller and smaller and smaller. This is a consolidatory period. That proves it right there. No short interest. People aren't really thinking it's going to go down much lower. No one's betting against it. That's great. You couldn't get much better news than that. So anyway, I just thought I would share that to you. And that, if anything, proves where I see the market's going. I am not rotating out of this market. I'm buying more. I'm even using margin. I'm not going to buy rubbish and cheap stuff. I'm going to stay here and buy more of this. This is great. The shorts aren't doing anything. The valuation is right. Insiders are selling less. This is just becoming too good an opportunity to switch out. And people are going to realize that when they've made some money quickly on the small caps and start chasing this up. But because they've sold their stocks for a quick trade, they'll pay 20% tax. Bear with me a second. I've just done a video with interviewing Tom Lee, reacting to his interview on CNBC. And he talks about this. I encourage you to go and check that out. Link above my head, down below in the description. Go and listen to that. I think it's going to tell you a lot about the state of the economy and where we're going. I think this is too good to be missed. So that's why I'm in. I'm doing it with my own money. I'm not going anywhere. And I'll prove it to you right now. There is my portfolio and there is my margin. I'm buying. I'm doing exactly what I say and I say what I do. So there you go. Over here and over here, I'll put more information. What do you think? Do you agree with me? Should we all dump Google and Microsoft and all the great companies and buy a few small caps, or stay where we are? Well, let's see what happens. Those that sell their stocks quickly will be back here soon, chasing the stock. They'll pay 20% tax on their gains, and now they're looking for a discount which won't be there anymore. They'll end up paying more than they were when they sold out. The tax they've had to pay will basically be lost with chasing the stock going up. So I say, stay exactly where you are, do exactly what I'm doing, buy on the way down, and don't touch and move out. Don't rotate. Stay exactly where you are. What a dream this is. Anyway, over here and over here. Until next time, as always, take care of yourselves and each other.